Thank you, Mark, and a big hello from London. Wow, there have been a hell of a lot of technical action seen at the end of last week in so many different markets. I will not delay any longer, but go straight into them. In the currencies, we had weekly key reversals down in Aussie dollar against the US dollar, Kiwi dollar against the US dollar, and sterling against the US dollar. All started this week looking lower, though I'd best describe it as hesitatingly. However, sterling against the US dollar finished the day yesterday with a bearish engulfing pattern that has made a more than suitable follow-on lower today. Prices have pushed down through the October 2016 flash crash low at 114.48, through the light support between 118 even to 114.5 from March 2020, and towards a congestion between 113 even and 111 even. And that dates from January 1985. Yes, 1985. This is the lowest the market has been since March 1985. Prices seem to be trending lower using the middle time, currently 113.97 of the June to August bearish Andrews pitchfork as a guide. The weakness in currencies versus the strength of the dollar was also seen elsewhere. We had weekly key reversals up in US dollar against the Canadian dollar, US dollar Norwegian krona, US dollar South African rand, US dollar Brazilian real, US dollar Indonesian rupiah, US dollar Israeli shekel, US dollar Philippine peso, US dollar CNH, the offshore Chinese yuan, as well as US dollar CNY, the onshore Chinese yuan, the 1-year NDF, then US dollar Thai baht and US dollar Romanian lei. Hence, one can easily regard this as a systemic move for dollar strength. There was an obtuse one in US dollar ruble having an immediate countering weekly key reversal down after last week's weekly key reversal up. But apart from this obtuse one, the only other currency key reversal we had last week in the markets I cover was a weekly key reversal up in euro against the Swedish krona. We also had a weekly key reversal down in spot gold and Bitcoin. Gold has not seen a follow-on lower, not yet at least, just a lot of hesitation around the lows of last week. However, the weekly key reversal down in Bitcoin last week was very interesting, as it offset a weekly key reversal up in the previous week, and thus was indeed an immediate countering weekly key reversal down. Now, since this happened last Sunday, we have had a sharp attempt lower on Monday, but it ended up as an indecisive spinning top, though with a long tail on it. To recap part of my commentary from last week, and I quote, "The trigger for the move lower was the market tangling with the declining short-medium moving average. That's currently at 21,408. This had been the first time it has done so since mid-April," end of quote. I carried on, and I quote, "It seems this market can't make up its mind whether to tackle the uptrend below or the moving average above," end of quote. Well, since then the market has dispensed with the uptrend, whilst the short-medium moving average is reinforcing the very recent 50% Fibonacci line overhead at 21,403. I have a suspicion the December low down at 17,490, which the market has fallen shy of testing since mid-June, may be in the frame soon. I'd next like to look at the stock markets, and we had weekly key reversals down in the Nasdaq Composite Index, the Dow Jones Index, the Shanghai Composite Index. That's an interesting one, as it was an immediate countering weekly key reversal down. We also had weekly key reversals down in the Chinese CSI 300 Index and the Phillips Semiconductor Index and the E-mini S&P futures. This last one has not had a follow-on lower as yet, but yesterday was nevertheless a daily bearish engulfing pattern, though no follow-on today so far. Overall, the market is still following down in between the lower time, currently at 36.47, and the middle time, currently 39.47, of the significant January to March bearish shift pitchfork. This pitchfork has been previously broken on the downside, but has seemingly repaired itself and is showing the way lower. Finally, in the commodities, we had a diverse bunch, but all were weekly key reversals down. There were weekly key reversals down in New York cotton futures, LME 3-month tin, Paris rapeseed futures, the white sugar premium, and the Baltic Supermax index. New York cotton has seen a dramatic follow-on move lower this week, wading into some congestion between 86.85 and 99.55. LME 3-month tin I covered in my weekly metals commentary yesterday. Paris rapeseed futures had a good start lower, even moving lower at the start of yesterday, but by the end of yesterday, prices had made a bullish outside day, which is the weaker brother of the daily key reversal, and today prices are higher still. Yet the market is still within last week's range, and perhaps more importantly, working its way down the June to date descending wedge pattern. This pattern has been the recent driver in this market. The weekly key reversal down in the sugar white premium was a seminal moment, in part prompted by a changeover, but fulfilling the secondary target at 191.5 on the upside for the June 2021 to April 2022 ascending wedge pattern before crashing lower. We are now set up for a possible monthly key reversal down here in September. Finally, we had a weekly key reversal up in the Baltic Exchange Supramax Index. This has all the symptoms of possible reactionary bullish action in an otherwise overall bearish market right now. If you look, you will note the October 2021 to March 2022 bearish shift pitchfork. The market's been following this pitchfork lower, most recently along and around the middle time, currently at 1514. I will be away at Energy Trading Week next week, but otherwise, I'm always happy to answer any direct questions with anyone who is interested. And with that, I'll finish this section from London. Hope you found these comments useful.